Hey everybody, morning, morning. How's it going? How's it going? How's it going? Get everything pulled around here where I need it. And we'll get started here in just a second. How's it going, John? How's it going, Patrick? Good to see you. Glad to have you. Glad you're here. Give everybody a second. I kind of started early. Give everybody a second to get here too. So, and there we go. There we go. Hey Goose. Morning. Morning monster. Got my peach this morning. Delicious flavor. Anyway. All right, let's jump into it, shall we? Got plenty to talk about. As always, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap. This presentation here, information, educational, and fun, is not a recommendation to buy or sell anything, financial instrument or otherwise. If you desire personal financial advice, you got to hire and consult a financial advisor that has your fiduciary, has a fiduciary responsibility to take care of you. All right. Morning, Andres. So, retail sales. Yikes. Sliding more than expected and growing at the weakest pace since June of 2020. Everybody remembers what happened in 2020, right? None of us could even go to the store, apparently. I mean, we were softening up on it a little bit, but, everybody's staying inside. Everybody's not going anywhere. I mean, the roads were wide open. You could go as fast as you wanted. No, it was a pleasant drive when nobody was out, when all the idiots stayed home. Anyway, so retail sales just rose 2.9% year over year, despite all of that inflation. So we're not, I guess we're spending roughly the same amount of money to buy a whole lot less goods. If you do the math on the inflation number versus the retail sales pop, it's not too good. We're buying a lot less crap to generate that little 2.9% year over year with whatever it is, the 6.5% year over year inflation or whatever. Anyway, you can see, we slowed down. Duh. That's the way it works. So, yeah, Walmart closed in Chicago and probably bail out, like Whole Foods was bailing out of San Francisco. So, you know what happens when you defund the police and they can't keep crime in check? Well, stores leave. Anyway, S&P 500 yesterday, poking above what we saw for the last 12 days or so. Potentially, but right into this resistance that we've seen back here in February, and we need to get on above it if we're going to go up to 4,300, which was the high from August, and 4,500 above that. But I do kind of expect potentially we see a pullback before we rally on up here. That would be, this could have been the pullback here. 1, 2, 3, 4, 5. And these things nest up. So if that was a little 1, 2, 3, 4, 5, we could see a pullback before the next big move, and then pull back, and then the move. That all fits the story here. So we'll see what happens at this level here. Not so sure we get just an immediate breakout, or we got some stuff to work through. So anyway, moving on with the S&P 500. Made into a simple view, taking out all the candles and all the crap. Poked just above yesterday. Just slightly out of the red box. We may come back and test the red box once again. And we're just right in that zone where we topped out back in February. So be careful. We could roll over one more time, come back down before we can get the energy to go back up. Let me pull up the actual morning movers. Oh, other chart too. Connect. Morning monster. There we go. IWM filled the gap this morning in the pre-markets. Nothing to do on that one. So just hanging out at the 50%, and this chart looks a lot better when it's not on log. Yeah, just hanging out right in the middle. Probably going to go up here. We could pull back just a little bit and then go up here. So S5FI not telling us a whole lot. We're just in the middle, hanging out in the middle. ES right up to the corner. Can we break out? Do we break down? We're at the decision point. You know, poked out the bottom and then shot right back up. Similar to what we did back here. Went on a mega rally, so poking out, we could just rally. And the channel, we held the channel yesterday. Let me pull that up really quick and we can look at it. The channel, yeah, I don't know why I didn't pop this up. Pull it back over. So this was the story of ES. This was midday yesterday. There's a 4-hour chart on this side, a 1-hour chart on NQ. This is what I look at all day. We were poking right into the high right there and got our negative reaction in the close. But NASDAQ significantly lower. So ES kind of catching up to where NQ was. Seeing that rotation out of big tech a little bit. I mean, that's what I see right there. Goose, you know, kind of fits with the narrative you and I have been talking about a little bit. So, I mean, ES could catch up. And then we've got Russell also down here at the bottom that has a long way to catch up. So this could be a squeeze type play. I was just talking to Goose about this before I went live, that we could see banks kind of squeeze a little bit. Maybe Russell catch up a little bit before the next big shoe drops in this financial problem. And we may get the all clear for now, but it's not going to be an all clear big picture. Banks are going to have this banking situation is not done. Even Jamie Dimon saying that this is going to last years. This is not something that fixes on a couple banks going bankrupt a couple weeks in March of 23 and then all clear. No, this is going to last a while, and we're going to have to work through it on a deeper level. So, how come, Hawk says, how come SPX and ES charts not matching them from forecast point of view? Underlying product is the same, right? No, futures are a contract for delivery of money in, the current contract is a delivery of money in June. S&P 500 is the index, is the sum of the companies right now. And it only updates during market hours. ES updates 24/7 or 23/7 or 23/5. It is closed on from Friday night till Sunday after evening and then opens back up. So it is closed Friday to Saturday, Saturday to Sunday, and then opens back up at 6 p.m. So right now we'll see a pop in ES when the market opens back up. And this is, like I said, this is a contract for June's price on S&P 500. And these two tend to run, let me do a little chart here for you. ES1, exclamation point, minus SPX. Look at this right here. This shows you the difference between them. All right, so they get a difference between them right now running about 20 points. Difference between SPX and ES. And when the contract rolls over, like it did in March, we get a big chaos thing. And then we, let's see, where are the spikes? There's the spike. We get these spikes when the contract rolls over, a big difference, and then they slowly come back. This happened in December, got a big spike, and then it slowly came back to the expiration, big spike. It'll slowly come back to the expiration, and then we get a big spike. The expiration is in June right now, and then it'll switch to September, and that'll be our contract. So if you're unfamiliar with how this whole thing interrelates, that's basically it. It's kind of like options, but they're not options; they're futures. So. And it's the delivery of cash. It's cash settled, not settled in shares or anything like that. So it's a complex, convoluted thing, Hawk. I hate to to make simple of something, but it took me several years to really understand the interrelation between these. Every time you see the contract rollover, you get a big spike, and then you drift it off. The difference between them comes down closer to zero as we get to the expiration, and then it pops to the next expiration, and we do the same thing over again. And really, the line is about where the green and red come together there. So it usually starts at about a 30 to 35 point difference between S&P 500 and the futures. The futures usually run about 30 to 35 points higher right at the contract rollover, and then that drifts off towards zero as we come into that expiration. The expiration is always it's like the second week of the expiration month, and for the index futures, we just have 4 major contracts that get traded: the March, the June, the September, and the December. For other futures, there are contracts that expire every single month. All right. Yeah, it's not really the same product at all. So, well, they are representative of the underlying. They trade different, they act different, but they move the same. They fly in parallel, but they're not the same ship. I use them as a gauge because the futures don't leave gaps in the underlying chart. Whereas S&P 500 stops trading overnight, and we get movement. I use the futures so we can see what that movement kind of looks like and predict it. So, got to kind of stand alone. I do put a little more weight on the futures because they trade 24/7 and give me a whole picture of what's happening. So, yeah. Yeah, so really we need to get above that 41, 40, really, even though I'm using a constant contract, and the ones that we were trading back here are different than the contract now, I still use that level. That's still the psychological level in the market right now. We got to get above this 4,200 to be able to pop to 4,300, and we're right at the end of this wedge. It's not as evident on this chart. It looks a little different. We're poking above all this resistance right here on this chart, but we still have this consolidation that we made that we need to break out of. And 4,300 still the target up here where we topped out back in August. Similar, just different numbers. All right. Moving on. Still expecting NQ. This would be QQQ if you wanted to trade an ETF for it. An ES, if you want to trade the ETF, that's SPY. Or if you wanted to trade a micro index, XSP. So NASDAQ, looking for it to rally up here, although, like I said, it's kind of lagging a little bit compared to ES trying to break above here. So just on the micro last 2 weeks, ES kind of outperforming NQ. Big picture off the bottom, NQ still outperforming both ES and Russell to the upside. Russell, like I said, still lagging down here, not consolidating up here like NASDAQ and S&P 500. This is your small caps. If you wanted an ETF for this, it's IWM. Dollar showing a little bit of support at that prior low over here from back in February. We break below that, probably on a path down to the target zone around 97, maybe as low as 95, 94, 95. We'll have to see. At some point in here, we're probably going to get a pop and then a push on down. Ethereum exceeding my expectations to the upside. Probably going to see a retrace at some point here. Probably. It makes it, the higher we go on an exponential type zip at the end, makes it more and more likely that we see a severe pullback. Could come back to 1800, could come all the way back to this 618 retrace, which would be somewhere around this 1450 to 1500 area. That would be highly likely at this point. So the Shanghai update did go through successfully. Nobody's really had a chance to dump any Ethereum. It wasn't a massive dump right at the beginning, so we got this little pop, excitement, but that could just be the calm before the storm. We could see a nice big fat pullback, and Bitcoin just kind of sitting happy too, inching a little bit higher overnight, but getting pulled back as banks reported earnings this morning. Lots of banks showing up this morning. And this is not one of them, but this one popping up to 1834 in the pre-market, way up here. Just that's no pattern that I keep track of. I guess that's probably a SPAC based on what I'm seeing. Looks like they maybe found a deal. And yeah, no news on that one. That easily pops up. JPM reporting, was that earnings today? I think it was somewhere in there. Too many little bubbles on the top of each other. Yeah, beating on the top, beating on the bottom. Of course, you know, all the all the money flowed to JP Morgan, and I don't know what that alert is. But anyway, so breaking above about 140 can lead us up to this 148. Let's update that target. 149, 157. Yeah, still need to be above this 140 where we gap down in here and found resistance and then dropped on out. So even though we're right back up in the zone, there's still some resistance built up right there where that orange is. And we're below the 618, so be careful. That's right where we topped before we dropped out that final push. So there's resistance there to go higher. Not that it's not a good opportunity, but I want to see it push a little higher before I'm more confident that we're going to see these higher targets. GS, get up, you know, JP Morgan announcing awesome earnings usually pulls all the banks up a little bit, all the big ones anyway. This one came down to support and has the opportunity to go higher. We're going to need to see it back up above. Let me run another fib line here. Yeah, back above this 350, 360 area right here to get the extensions on out. I do have a big target way up here where lots of fibs come together around 470. So could take a while. PKX. Yeah. Won't even look. There it goes. That looks like it's going to roll over. I mean, that's a nice exponential move, kind of like Ethereum, and kind of expect it to come back and retest thence from where it broke out right here. This zone. MicroStrategy continuing to push higher. Market just opened. Getting some alerts. And yeah, the resistance right up here at 357. Looks like we're going to get there pretty quickly. That's where we topped out back here in August. Breaking above that can take us back way on up here around 500. Sorry if the charts are messy. Keeping track of a few things. TMV, 20-year Treasury, 3x bear. Not really tell anything. Even though we got a little pop on it today, could see a rally up to these prior highs at 137, but it's below the roadmap line, making a lower high so far. Nothing saying we're going higher yet. This looks like the line that we need, and this could push lower and breaking below, you know, all these lows right here. Getting some kind of daily close down there is going to indicate we probably push lower, may find support here, but it may go on down. MTB looks pretty horrible, even though, like I said, JP Morgan pulling a lot of banks up, but that one looks rough. That got beat down a lot. Opportunity to come back up. We've got resistance hanging out right in here. AXP, American Express. Yeah, that one broke the downtrend line. Even during the bank problems here, has the opportunity to go up. I have a $200 target, just retesting the highs. But where's the resistance on this move? Yeah, we did turn down right at that 618. Got another 618 where it gapped, kind of gap and gap. So I really want to see this back above 175 to come up to this target up here. And look, the 618 just happens to sit right there below the prior high. The 1618, excuse me. Yeah, so I wouldn't count on 200 necessarily. Looks like 198, maybe 198, 198, 197, maybe as much as we get. Hey, Arthur, good to see you. I'm doing pretty good. Doing pretty good today. FAS, opportunity for it to pop. And just run the little fib resistance right at the roadmap line. Above 80, then we can really start rocking. Goose, I don't feel like you missed anything yet, my man. I mean, I wouldn't really count on a breakout until we're above 92 anyway. And then, as I showed you before, we could see a mega rally on this. What kind of mega rally am I talking about? Well, let's zoom this out just a little bit. This is more than just today we're talking about here. See, we had this kind of move right here. This is like a nested 1-2-1-2 type situation. Yeah, right up in this. This next move could take us up in this 200 to 270 area. And you might be saying, whoa, that's crazy. Well, this is 3 times leverage on financials. And if banks recover and start outperforming into a new high, we could see that kind of thing. And it could inch on up. So just be cautious what you got cooking. All right, that is a weekly time frame, and we're talking about years. You know, this could be 27, 28, 29, something like that. All right. Don't get caught up in a day trade thinking we're going that high today. We're not. We got a lot of resistance to work through. This is a big resistance zone right here on FAS. Now, that all said, my stuff doesn't always work on the best on leveraged instruments, and the prediction may not work. So leveraged stuff doesn't always track with the way I use these tools. So that and biotechs. SAI looks like pop, but retracing may come right back down and retest the at least this where it found resistance before, if not back to the roadmap line. Big range already today. That one's obviously got some day traders attacking it like crazy. Cold continues. Natural gas. I mean, this looks like it's going to extend right here at this point. Trouble breaking through the prior high, but if it does, 93 and 106 on the upside for cold. NTES, NetEase, we've got resistance right at these highs. Breakthrough, we can get extension. Got more resistance right over here though. This has been a resistance zone. I would be very careful trying to chase this one higher right now. There's better opportunities out there, I do believe. MS, yeah, just trying to break out of this consolidation at the bottom. First indication back above 89. Then we got to clear some resistance and stuff. Let's clear off these prior fibs. I thought I did that before already. Probably just didn't save it. And yeah, got to get back above 93 before it really increases the odds of seeing like 106 and 112. And Wells Fargo is a trash of a bank. Same sort of situation, although this has been in a bigger downtrend. And it's got lots of resistance right there at the 48 area. Something above 45 probably could lead us to at least a potential to break that prior highs there and get up to 52, possibly 56. It looks like they reported earnings, beating on the top, beating on the bottom, but they are a kind of a horrible bank. My personal bias aside. Anyway, VFC looks like it's going in the toilet. I would not trade that. BNKU, let's see, U.S. big banks, 3x leverage ETN, sitting right at the bottom. Doesn't look overly bearish here. It's a nice opportunity to double your money if it popped right back up where it was. And I don't know. I'd have to dig into that one a little more. It was consolidating right in the same spot back here in 2020 before it went on this mega rally. Few shares of that might not be a bad play. I'll have to, yeah, Goose, put that one on your list. Let's look at that one later. HSBC. This I issued as potential chart of the week here. We turned down at the prior high from February 22 in February 23. Retrace to the roadmap line, popping right up here. Break a move up through 37 can take us up to 41, 43, potentially even higher. And that looks pretty strong, actually. Pretty strong. I I do want to see it above 37 though before I jump on it. Be careful. Liquidity issue with BNKU. Yeah. Let me just dig into it. Anyway, BAC. That looks a lot like the BNKU chart. BAC just kind of sitting down here. They don't have customers in mind when they do business, in my opinion. But, again, does have opportunity to recover. This one, lower high, lower, obviously lower high, lower high. A little bit higher high here, but breaking lower, lower low. That negates that higher high. And it's got some, got some work to do. And resistance right up here around where this trend line is. If it can break through that, then it increases the probability of seeing like 41 and 45 on the upside for BAC. BA, I threw in a few that are diving, probably going to the target down here at the roadmap line. Yeah, it could be you could have a Head and Shoulders, but yeah, looks like it Head and Shoulders played out to the downside, right? Kinda. Sloppy. Almost got there. Not quite. Almost got there. Anyway. Yeah. And it could reverse the other way, but it's got a lot of work to do. A lot of work to do. That's, yeah. Anyway, BA target down here at the roadmap line. Goose, we talked about that one. I didn't know, the news on the Max was going to come out last night. I don't think we all did, but looks like probably going to reach down there to the roadmap line. Then we'll see if it holds support. That's where it consolidated right there. Same kind of level. All this stuff kind of comes together. If you were surprised, I was not. CTLT, Catalent, I don't know. Gapping way down here, back to the prior lows, or near the prior lows. Holding support here can be positive, otherwise it may push lower. Yeah, probably nothing burger, but I still think it's going to retrace to that roadmap line. Still. I drew that on there, 2 weeks ago? Now, ServiceNow getting a little baby hit, but probably on the path to 513, possibly 537. Just find a little resistance right there where you would expect it to. SPR, Spirit Aerosystems, Spirit Airlines. Need it to hold here. If it doesn't hold here, possibly going back to the lows, extension to 16. If it holds in here, that's a nice 1, 2, 3. Could go higher. Upside would be at least 45, if not 55. All right, that's kind of what I see moving for today. My bias for the day, not a lot actually. If we can break out, if we get above 4,200, I do expect we define some resistance. Do expect some resistance here in this 4180 to 4,200 area, 20-point range. If we can push above that, we can start quickly seeing some appreciation of price on ES. S&P 500, does have resistance up to about that 4175 area. Above that, we start getting some clearer air up to that 4300 level. And as we get up there closer, I'll try to get more specific levels at 4300. But right now, 4300 is a pretty good target. And based on the channel, based on where'd it go? Let's pull that back up really quickly and talk about it. Let's zoom this up. Based on this right here, what we did, riding the bottom of the channel, then pulling away. That really sets this thing up to potentially come up here and test the top of this channel. Maybe out to, let's talk about when. Could be maybe another week or so. Next week. Could be looking at 4,300 right up there. You can see the level coming across. Could be right over there next week. That seems crazy, JT. Yeah, but I mean, look what we did over here. See what we did right there? We rode the channel a little bit and then went on a monster run. Took about, these little blocks are about 2 days. So took about 4 days. You know, we're not going to trade tomorrow and not going to trade, well, we'll open back up on Sunday, but about 4 days. So Monday, Tuesday, Wednesday, Thursday, you know, this time next week, we could be up here at 4,300 and everybody be going, wow. So let's keep it in mind. A little bit bullish, but we are right at this resistance. I've got tons of alerts right in here. So join the conversation with us in Discord. Links in the description if you want to come join us. It's like $5 for, you know, whatever it is. Anyway, make sure you subscribe. I'll go live again Monday for the market movers, and call it Morning Monster. Have a great day, everybody. I'll see you again